So, hello everyone. Let us start the learning of level 1. So, in addition to yesterday's learning about Dow theory and how the candlestick patterns are made and few some other basic concepts, today we are going to cover few more topics starting from time frames. So, as we were discussing yesterday, time frames are nothing but some duration in which we wanted to do the trade or we wanted to look at the chart. Chart means how the price actions are happening in some particular duration. So based on that there are some predefined time frames in investing.com or even any other uh, trading accounts. Trading accounts also have the chart for our reference. Okay, so depending our requirement, we are going to select those time frames for our analysis purpose. When to use which time frame, that we will be learning in the subsequent discussions. So typically, like monthly chart is the highest time frame available in any of the charting sites, including investing.com or TradingView, or even the chart within the trading accounts. Then weekly, daily, hourly, and so and some 30-minute, even 2 hour, 45 minute, 15 minute. So these are the different time frames, and all the in time frames informations are available in any or of. Maybe I'll just show you quickly just a quick example of the time frame what I'm trying to mention here. Sorry, where is my chart? Okay, so if you open any chart, let's say maybe Dr. Reddy's. Okay, so in any of the chart, if you look at, sorry, this is a Davis slab. So next to uh, the abbreviation of that particular stock, you can see there are 515 on day 1 month, and there is a drop down. So in drop down, whatever the time frames, whatever this is displayed here, these are nothing but the time frame is starting from 1 minute, 15, 5 minute, and then to 1 month. Okay, so these are the different time frames which through which we can select depending on the need. Okay, and we also discussed that, okay, each candles represent uh, the price movement for the selected time frame. If I'm selecting 1 day, that means each candle is representing the price movement on a daily basis. Okay, so next topic what we are going to cover is the trend line, and within the trend line there are two types of trend line. One is called support, and there is called resistance. Okay, so what is a trend line? Okay, so I mean, from the definition per se, a trend line is um, any line which is connecting either the highest values of the price point or the lowest values of the price point. What it mean that, suppose this is Dr. Reddy's. If I select the weeklies time frame, so maybe but after a particular time frame, okay, so this is a all-time high. Okay, so that means there is a this price point. The price of this Dr. sorry, not Dr. Davis Lab, the stock went up to this price point, and then there are some which is not visible. There are some pseudo. Okay, normally there won't be any line, so I'll just delete it for understand. Okay, so if you look at the chart, so price went up to this level, that is the around 5,426, and after this it didn't move further, and it started coming down. Okay, so if we put any any horizontal line. So if you choose the horizontal line from the second menu toolbar option, so click on this one and then select the horizontal line. Okay. And if you click on the topmost price point, so a horizontal line will be, drawn there. Okay. And you can select the color based on your choice. You can increase or decrease the thickness of the line as much as you want. And this particular line is a example of a trend line. Okay. And because at this price point, it it got, I can say, reverse, and that means that this pseudo line, which is normally not there in the price point, we are adding, considering the price movement, and that will be treated as a resistance line. Why resistance? Because the stock price is not moving further. It is touched that line and started coming down. So that particular line or the price point is creating a resistance for the stock price to move further. Okay, and which is clearly visible also. Like after this price point, it is price started coming down. Okay. Um, Similarly, um, there is another line that is also called as a trend line, which is called as a support line. Okay, so support means any price point through which at which the price is taking a support means all support will be the always the lower level. Okay, and resistance is the upper. A simple understanding, whenever we say resistance, that means the upper. So that means the price movement is not moving further from that price point. And support means the price is not going down further from that price point. Okay. So if you look at the recent example, okay, if I took a horizontal line and just put my line that below to the uh, this price point, okay, that means it is called as a sup support. Okay. So that means the price is not going below this price line. Okay, so that is where this trend line will be called as a support line. So typically there are the two, support and resistance, and it is not only possible that there will be horizontal only. There will be a slanting support and resistance line as well. How it will be? So for example, if you look at this from this price point, okay, maybe I'll just put a one vertical line just to differentiate which price point. So maybe let's take the example of uh, 18th of October 21. Okay, so this is the weekly time frame. So from this date, the price started coming down. Okay, if I took the another, I can say trend line. So here I'm selecting the slanting trend line, and I'm keeping clicking one place here and another down. So I'm just trying to, you know, uh, touch the maximum number of the highs. Okay, and if I extend that particular trend line, right? So what it means, that this is is, you can say, slanting trend line, which is touching the highest point, all the highest point, or you can say most of the highest points. Okay, from uh, October 18th and sorry, October 18, 21 and onwards in a weekly time frame, right? So whenever, so this is the another way of putting the trend line, and in this one, because this particular line is not allowing the price to move further, it is touching every time it is touching. Maybe here it touches, this time it is not touches, before touching itself it came down. This is the another point, here is the another point. So this line is also treated as a uh, resistance line, which is a slanting one. Similarly, if I took the same example, similarly maybe will be the another support line. So this is a resistance because it is not allowing the price to move up. And if I just try, okay, just select the lows. Okay, so maybe I'll just do the one click here and another click somewhere here. So that the maximum number of the price points should touch the support line. So if you see in this example, okay, maybe I'll just highlight just for the clear understanding. So this is one place. There is another. So these are the three places where this price point, this price of this Davis Lab stock took the support and move further. So all these, if we combine, connect all these lines, it will be a treated as a support line because it took the support and price moved further. Okay, so typically there will be a two kind of resistance. One is the horizontal resistance line and another is a slanting resistance line, and similarly the two kinds of support also. One is horizontal and there is the slanting one. Okay, um, here one important point to consider is the horizontal support or resistance. There is a no confusion. It will be, or it is always applicable for the slanting lines and slanting support or resistance. So if it is a resistance means if we are connecting the top of the price point, any slanting resistance line which is having the right hand side in a lower side. Okay, so that means it is making, you can say, the obtuse angle, right? Or I mean, it is the way that you can remember. So basically, right hand side should be low. That will be more effective. Okay, there could be another resistance line. For example, let's take, suppose this is under. So I'm just connecting all the highs of something like this. Okay, this is also a resistance because every time, okay, it is price is touching here but not moving further. Here it is maybe not touching, but it went closer but is not moving further, and this price point and one more this price point. Okay, so that is also kind of resistance when we are connecting the highs, but it won't be that much effective. Okay, so any support, any resistance line which is having the right hand side in upper and left hand side downwards, this kind of support, sorry, resistance is not that much effective. The effective resistance will be something like this, where the right will be the lower side and left side will be the higher side. That will be treated as a effective resistance line. Hope you are clear. But if you have any confusion, any question, feel free to ask. Okay, that is, and when you starting doing the practice, I mean, there is no need to actually remember it, but just for a understanding purpose, we need to understand which support line, horizontal, any support or resistance which is horizontal, no, there is nothing to remember. It will be always effective. But in a slanting one, we need to remember that if is something having this kind of slope, that will be more effective.
So, Sachin, are you saying that if the gradient is negative, then
Yep,
basically it's an effective
correct.
resistance line?
Right. It is more effective than the positive gradient. Right. So, I mean, I will leave up to you how you remember. I try to put in a simplest way, but gradient, when you are using the one more, I can say the heavy word. But that is helping you to remember it, that is well and good.
Okay. And the opposite is true for the support line. Like if support
Correct.
line has positive gradient, then it's considered more effective.
Correct. Correct. And because here in this particular example, there is a very beautiful condition. When we learn about the implementation, we will discuss definitely more. But because in this particular stock, something very good is happening. So if you look at this this gradient, negative gradient, okay, in your language, so from this is the again a support, sorry, resistance, the second resistance, third, maybe this is kind of fourth, and the fifth one, it is broken, right? So once resistance is broken, next time the same resistance will work as a support. Okay, so if you look at this is broken. This particular resistance is broken at this particular point. The price moved up, but when the price is coming down, the same resistance is working as a support. So the price came down here, and it took the support, and its price is going up. And same thing applicable for the resistance also. Once support is broken, it will work as a resistance. So in this example, this was the resistance, okay, and it is broken. Now it is working as support. In
But
some
that
other,
also depends on how I or somebody draw the line, right? I mean, say for example, I mean, if you where you have started, you can basically draw it following the first few red, right? I mean, you have like come a little bit down, and then you'll see that, yeah. I mean, little bit here, left side. No, not here. I mean, you have basically touched all the highs given the time period that you have got to see.
right.
But say if you are at a time period of this 2022, at that
Mhm.
point you could have drawn it, and then you could have said that, hey, it has already become, basically it is broken, it has become a support line, and it has started going up.
So okay, so from which time frame you want to draw?
I'm saying wherever you started is fine, but say
Yeah,
your visibility of the time frame is only up to 2022, that wherever the 2022 is written there on
right,
the graph.
right.
No, little bit right, little bit right.
Little
Come a
bit.
little bit. Yeah, yeah, no, no. There is a 2022. You can see, right?
Okay, this one, right. Let me put a horizontal line there.
Yeah. So
So
just on top of it, there is a dip here, right? So you could do, draw a resistance line which is basically have a higher negative gradient, and you could say that, hey, it has broken and now it has gone positive.
so from here resistance, because if I want to draw it here, so that means we have a data already available the before one. So that means I cannot come here. This is the highest point. Maybe suppose we are at this point. You wanted to something like
Correct,
this.
correct. Say we are not at 20. Um, Say you are not at 2023 yet. I mean, you won't
Yeah,
won't
I
have an visibility, right? So then you
something
draw it.
we are like this,
Yeah,
right?
correct.
Yes, correct. You are right. So that is also whatever you are saying, that is absolutely correct. Um, so the same thing, like okay, so the same. It is till this price point, till this place, it is working as a resistance, and here is broken, right? And again it came down. So it is in this example, it is broken once again. Okay,
Mhm.
so this is the one kind of I mean, bit for the support and resistance. This is the one understanding. So for the trading purpose, this is not the only one criteria that will support. When we uh, start learning the implementation, there will be couple of things which will be applied together. It's like when we are cooking, we are making a simple dish. For example, the khichdi, right? So khichdi is, I mean, a healthy dish, although, but to maybe it is, you cannot like it always. Maybe whenever we are sick, we can like khichdi. Okay, it's the simplest one. So this is the simplest I can say dish, right? You may not always like it. Okay, so there are few more spices that required to do the perfect, to do the better, arrive at a better conviction, and to do the better trading with more confidence. This one, support and resistance, is one of them. And I can say the most frequently or widely used. I mean, whenever we are adding the conviction, support resistance is the always considered as the top, one of the topmost priority, and a few more, couple of things which we will learn anyway. So as of now, just understand that okay, the support and resistance. Once the support is broken, it will work as a resistance, and once the resistance is broken, it will work as a support. So and especially in this example, what I was trying to share that. So whatever I have seen, okay, based on my experience, such kind of examples where there are the long term resistance and which is slanting one. So this is whatever I have said is the weekly time frame. and this particular resistance line, it is touched, maybe here is one, two, three, maybe the fourth time it is broken, right? So this scenario, if it is long term sub resistance, whenever it breaks, it it gives you a very good targets. Okay, and maybe you can mark the Davis line, you can observe, right? Whenever it will give you the upside movement, it will keep going for a long period of time. It will take a halt in between, again depending on the support and resistance. For example, if I draw some more support here, sorry, support or resistance, so this is the another resistance, I can say. So look at this, this is the price point where it took resistance here. Same resistance is also took the support, it is broken, but again it went up, it doesn't sustain. So it took a support here, next time support, it is broken here, and again it is working as a resistance. So when the price point will come here, it will again do something plus and minus, but ultimately when this one breaks once again, it will keep on going further. So there are the high possibility whenever the slanting long term resistance breaks, it gives you the very good return. Okay, moving further, let us, I mean, primarily concentrate on maybe most of the, I can say that concepts. We will, whenever we learn the application, that time it will be much more clear. So we discussed about support trend line, resistance trend line, and trading range or channel, breakout and breakdown. Okay, so support and resistance we learned. Trading range or channel is called, often stocks moves in a channel defined by the support and resistance. So what it mean that let us select some other stock. Um, Shibu, or maybe you can share any of your favorite stock. Maybe you trade or you wanted to look at. We can take that
No, no,
example.
I don't trade.
Oh, no
I,
worries,
I
no
don't
worries.
know.
So yeah, so general. I mean, I'm taking the example of those stock which we know. This is the Asian Paint, right? So channel means what it says that. So whenever any stock is supposed started, let's just say, okay, when we draw, suppose these are some support and resistance that we have drawn. Okay, let me, this is the weekly time frame. Okay, and some of the support and resistance already drawn here. So whenever a stock movement happen, what is that the channel concept says that typically once any support or resistance get defined, it if it moves between those some range, right? It is touching the resistance line and then maybe touching and coming down and take the support, and movement happens between those two or maybe more than two ranges. So that range is typically known as the channel. And whenever it breaks in any direction, if it is breaking in an upward direction, it is known as a breakout. And if it is breaks at a downward direction, it is termed as a breakdown. So, for example, in this Asian Paint example, okay, and this is select. I have selected the weekly time frame so that we can have a long term view. So for any stock, when we are starting the analysis, it is always recommended to look the stock at the higher time frame, so that we should able to understand its overall history. It's like what I can say, in a Indian marriage system, whenever like arranged marriage is happening, I'm not talking about, okay, this is just analogy. So we look at the entire, I can say, what is their family, like family background, who they are, and blah blah blah. I mean other stuff. So similarly, if I take the similar analogy, whenever we are analyzing any stock, we need to look at the entire history. So we can select the monthly time frame and look at, okay, what is the overall. Like initially we learn about Dow theory, it is the outperformer or underperformer, like Ghoda or Gada or the sideways. So by looking at this Asian Pen entire history, we can say that it is kind of a outperformer. It keep on moving and up. Maybe in the last few months, not few months, I can say last many months, it is moving in a some particular range. Okay, The highest range here you can say that okay 3,500 to something, and in between since last maybe a year or 10 months or more than 10 months, the lowest is something around 2,500. So it is moving between 3,500 to 2,500. Okay. So that is the channel. Channel means the upper and lower. It is moving in those two price range. Those two price range is nothing but the call as a channel, trading range or the channel. Okay. So often a stock moves in a channel defined by the support or resistance line. And breakout and breakdown, as I said, suppose whenever this channel is the direction in which this stock price moves. So I'm just removing few of the lines just for better understanding. So suppose this is the I can say long term resistance line, the blue one, or maybe I can select the resistance as a blue because for remember sky is the blue, so upside it is blue, and the below is I can choose as a red. Okay, you can choose whatever the color, maybe green. Okay, doesn't matter. It is your choice. So as of now, it is moving between 3,500 to 2,500. So suppose any point of time, if the stock price, it may be just assume that okay, it is going to break in a upward direction. Suppose it breaks somewhere here. Okay, it is suppose it moving upward direction. So if it is breaks the all-time high or the resistance line, it will be named as a breakout. And any point of time, suppose it is coming down and suppose breaking the this support line. So that particular phenomena will be called as a breakdown. BO or BD. Breakout means breaking the upward direction. Breakdown means breaking in the downward direction. Okay. Yeah. So these are some example. I think we have already seen in the direct chart, but just for understanding purpose, we can show. And don't, I mean these are the like whatever the PPTs I'm showing, I will share with you once we'll done with the session, so that for your own personal reference purpose, these PPTs will be with you in the form of PDF, and you can refer any point of time as needed. So this is the simple support trend line, and these are different support levels. Similarly, there's another example of support line, and when this is example of Axis Bank, and look at here, there's a 1, 2, 3, 4, 5. So 5 times the same line work as a support, and once this support is broken, that is called a trend line breakdown (BD). And when it breaks, it again gives you the I can say the higher or the long range return. Return, why I'm saying here, if somebody could have sold Axis Bank at this level, then again, I mean, they could have purchases. And you know that in a stock market, it is possible that you can sell first and buy it later. So, and that is called as a short selling. Okay. That again we are going to learn further, but at this point of time, just understand that it is stock market is possible that you can sell your stock even you don't have it, and then buy it later when the stock price goes down. uh so yeah, these are some other example of Nifty 50, that index support line, and once the support is broken, the long term support is broken, it is giving you the good return. This is basically the, I think, the corona time, I believe that support line breakdown is happening. Yes, there's another example which we were discussing. Once the support is broken, it will it will work as a resistance. So this is example of yes bank. So this is the kind of horizontal support line. Okay, so it is taking us up. Okay, so till this price point, it is working as a resistance. It is broken here, this price point. After that, the same resistance is working as support for some period of time. It is a weekly time frame. So many weeks, it is the price movement happened in a upward direction, and then again took the support. Again, price moved up, and here again the trend line breakdown is happening. And the same trend line is when the price is moving up, the same trend line is working as a resistance. So this is a typical example where the same line is working as a resistance, as a support. The trend breakdown is also happening, and the same line is working the resistance. Okay, so all the examples what we have discussed are present in this example. Resistance trend line. So we already looked. This is another example of the BHEL. So this is example of again the negative or the slanting support line. Yes, this is another example of resistance trend line. So just be familiar with that. I'll try to share some of the kind of a homework. You can select your some of the stock, try to draw the support line, trend line. So unless until you don't and draw those lines by yourself, uh, it will be it will not be handy because when we start doing the analysis, these support line, resistance line, we need to draw by ourselves. So it is advisable that you keep on doing the practice maybe parallel. So maybe today or tomorrow I will give you the some of the exercise, and during the weekend just find out half an hour time or just 15 minutes, and then you can try drawing some of the support and resistance line. Yes, this is some more examples. Okay, so now we are going to understand. Okay, is there any question on support or resistance line?
Um, one question, if you
Yeah.
want, if you are covering it later, I don't know if it is related or not, but this
Uh-huh.
came to my mind, and if you're covering it later, you can keep it aside. So when somebody says that, this stock has hit the upper circuit or lower circuit today,
Mhm.
what do they mean?
Oh, it is very simple. So what happened that so I'm not sure if you have watched that market overview sessions, Shibu. There are two videos. So this is a very simple thing. So all these market movement are governed by SEBI. Okay, and we have the two market, National Stock Exchange and Bombay Stock Exchange. So those are the market. Nothing but it's kind of, you can say, Amazon and Flipkart. Same product or same stocks can be sold or purchased via these two stock exchanges. On top of that, there is a SEBI, who is the regulatory authority. So there are sometimes there is a possibility that some maybe some goof up or some fraud is happening even in the stock market. Some fraud like the 1992 Harshad Mehta, we know, right? So for example, there are some very high net worth individual and they wanted to pump any particular stock, pump up or pump down, both are possible, right? So SEBI has decided a limit for any particular day. If the stock price of any stock is moving beyond a certain percentage, okay, for a certain period of time, I think that is for 15 minutes, the trading will be stopped automatically for that particular stock. Okay, so for example, any stock price, the price of any stock is for let's say 100 rupees. Okay, so the limit has been already decided. If the 100 become 120 on the same day in any time, any point of time, the trading will start for 20 minutes or 15 minutes. At the same time, if 100 become 80 on the same day, the trading will be automatically stopped for that particular stock. So in between the 15 minutes of time, SEBI will do some quick investigation. It's kind of a smoke testing, if you remember the power on days. Okay. So SEBI will do the quick investigation that, okay, if there is some goof up happening, because SEBI has all the information uh, how the price movement happened. It is by the single trading account or the multiple trading account, all the maybe the multiple location or same location. So based on certain algo, they will able to identify. If they find that, okay, something wrong is happening, even they will suspend the trading for that particular stock for the entire day till the time they get complete idea. So to answer the question in a short form, whenever it is touches the any defined limit in the upper side, it is called as a it hit the upper circuit. When it touches the defined limit to the lower side, it's called as it hit the lower circuit.
Got it.
Okay, great. So candlestick pattern. So bullish, there are three candlestick patterns. That is, one is called bullish, bearish, and neutral. So in simple term, by looking at the candle pattern, we can able to identify that, okay, the overall market's mood is in a upward direction or a downward direction, or maybe it is not giving any indication. Okay. So what are those candles stick pattern? How we identify? The first one we are going to touch upon the bullish. Bullish means the candles, the type of candles which tells that market is going in upward direction. So there are five kind of candles, bullish candlestick pattern: the bullish hammer, bullish piercing, bullish engulf, and a morning star. Okay, how to identify them? So I think bullish candles are very simple, very easy to identify. So I'm not covering separate. So any kind of a reasonably uh, big size candle, like these green candles, like it has the reasonable, very clear cut, the green body, uh, the little having a some normal wick size. So these will be treated as a bullish candle. Any healthy green candle, you'll say all green candles will be treated as a bullish candle. Okay. So other candles, how to identify? One is called the hammer. Hammer is the such kind of candlestick pattern where there will be a smaller body and the longer wick towards the downside. So this is the hammer. How the hammer looks like? It is having the the metal part, and below that there will be a kind of the handle of the hammer, and the metal part should be up. So body should be the upward direction, and the handle should be downward direction. That is the hammer in the maybe in the technical analysis of the stock market. That is how we treat as a hammer. If it is a reverse one, if the body is down and the handle is up, that is called the inverted hammer. That we'll learn in after few minutes. Okay. So the color of the body does not matter. Okay, it should be red or green. In both the situation, it will be treated as a bullish candlestick pattern. In a normal scenario, the wick, the size of the wick should be around 2 to 3 times as compared to body of the candle. Okay, as I said, it is more of the art. So there is no exact measurement 2 times or 3 times. You can say in general, the size of the wick should be 2 to 3 times larger than the body. That if that kind of candle we see, we can treat them as a hammer. Okay, and their significance is when they are considered as a potential reversal sign when it is found at the bottom of downtrending uh, stock. So for example, any stock, if it is going maybe down and down, maybe just take the some quick example. Okay, um, this is not the let me find a quick example so that it will help. Let's say SDFC Bank. Daily, daily, daily. Okay, let's say the life example. Okay, so here SDFC Bank I have selected in a daily time frame. So from this price point, the kind of market was coming down and down. And today's in the daily time frame, it made a okay the hammer type of candle. Okay, so this is live example. Maybe if we are interested, just let's keep eye on SDFC. What the concept says that okay, if such kind of candles is formed at the bottom of the downtrending stock, then it will be treated as a reversal sign. That is okay. So maybe you can mark the SDFC, and maybe next couple of days we'll try to observe that okay, it is working or not. But in general, that is the learnings. I mean, that it has been observed that if a such candlestick found at the bottom of the downtrend, it will be treated as a reversal. Reversal means from here, the market is going to move in a upward direction. Okay. Uh, yeah, here in my stock here, there are some example. This is the Nifty 50 example. And look at this way. So there is a body and this is the, the wick size, and wick size is maybe here is more than 2 times. And after showing this kind of hammer, and here is also hammer and this space is also hammer. It again moved up and moved down, made another hammer, but after the second hammer, it keep on moving. Okay, it has not turned back. So this example of Nifty 50. Yeah. So next, next type of bullish candlestick pattern is called bullish piercing. So bullish piercing is the two candlestick pattern where the first candle will be a red candle, second candle will be the green candle. And other characteristics is that the second candle, which is green candle, will either start at the lower of the first candle, or maybe it can start at also the same level of the same, same red candle. But the main point is it should be closing above the median of the red candle. So even it is start forming maybe little bit lower or at the same level, but it should be closed above the median of the red candle. So if such candlestick formation, if you can see, uh, and that you can treat it as a bullish candle, and the name of that kind of candle is bullish piercing. If you don't remember that bullish piercing name, that is also fine. The main thing you should be able to identify, and it is very easy to remember logically. The first candle is a red candle, the second one is a very clear green candle. It has done the I mean up movement, moved more than half of the, the red one. So that is how, I mean, you can maybe remember it logically. If not, then just remember it by looking at the candle, the image of the candle. Maybe when I will share this PPT, you can, all the candle type you can print out and paste it on your, maybe in front of your home desk or something. I mean, otherwise, after a couple of days by practicing, you should able to, I mean, remember that, okay, what kind of candle is treated as a bullish and what kind of candle will be treated as bearish. Okay. Next, okay, this is some example of bullish piercing. This is the LNT Limited. So look at this candle. So after this is the red candle, and after the red candle is a green candle, which closes much above than the median of the red candle. And after that, the price of the LNT keep on moving. So that is the one example of bullish piercing. Next one is called bullish engulf. So bullish engulf is the similar to bullish piercing. And this bullish engulf will be a kind of a much stronger bullish candlestick pattern. Why? The simple difference is it has not only closing at the above the median, but it is completely closing above the previous candle or the equal to the previous candle. So overall, it is basically nullifying the the price fall by the red. So in the red, in the all the example, red candle is what? Red candle is depicting the price fall. Just after the red candle, if you see the green candle means it is nullifying the effect of those uh, price fall. Okay. So this is engulfing. Engulfing is completely eating the red candle. Okay. So if you find these two is candlestick pattern, you can treat them as a bullish candlestick pattern, and typically you can maybe safely assume. I mean, this is one of the conviction that, okay, after this market is going to go up. There will be few more conviction which we'll learn, but as of now, this is one way to identify the market movement. Okay. Is there any question, whatever we have discussed so far? I mean, feel free to ask if you have any question in between. Great. Moving further, this is example of bullish engulf. This is again Nifty 50. So this is a red candle and it is completely eaten by the green candle. When I say eaten by, that means the next green candle is much more bigger than the red candle, and the body of this green candle is, completely shadowing or much more bigger, and I can say nullifying the effect of the red candle. And after that, if you look at the market, it is price is keep on moving up and up. Bullish engulf example. Next one is called morning star. So morning star is basically the three candlestick pattern where the first candle will be the red. Second candle doesn't matter. It can be red or green, but comparatively it will be very small candle, and that with a small body. Color of the body doesn't matter, as I said. And the third candle should be a green candle, which should be closing above the median of the first big red candle. Okay, so it is a, if you look at, it is kind of a bullish piercing. So, but with bullish piercing, there are two candles, but in this morning star, rather than having a two candle, there are three candle, and third candle in the middle, it is having the very small. Okay, so I mean, technically, if you wanted to remember, you can just, I can say, if you are finding such a candlestick pattern, don't get confused by the second candle. Either you can ignore it and treat it as a bullish piercing, or if you treat it also that, okay, just remember that this is an example of the morning star, and overall the combination of these three candlestick pattern is a bullish candlestick pattern. That means once you find this one, this type of things, and especially again at the bottom of the any trend, once you find such a formation, especially at the bottom, we can very safely assume that after this, markets is largely going to move in upward direction. Okay, the example of the morning star, this is again Nifty 50. Look at this, three candlestick pattern. The first one is bearish, then the second one small body, and the third one is the green candle, which is closing below the median or below the mid of the first red candle. And after that, market start moving up. And if you look at this one, it is kind of the bottom at the bottom, which as we discussed, which is the most effective scenario. If you find the scenario is the bottom of the any trend, that means it is giving the reversal sign, or from there market is going to move in a upward direction. Okay. No, that is some normal thing. So yeah. So this is so this is the formation of the candle which we have already discussed yesterday. So I'm skipping that part. Just have the five different type of bearish candlestick pattern as we discuss about the bullish one. So bearish one, again, I'm not going to discuss. It is simply like the bullish candle. Bullish candle is typically the standard green candle with a healthy body, maybe a wick size doesn't matter too much, but it should be reasonably healthy. Similarly, the bearish candle is also a red candle with a reasonable body size. Length of the wick does not matter that much. Okay, so any red candle, for example, these red candles are the bearish candle. So I mean, we don't need to study them separately. By looking at the candle, you should be able to identify these are bearish candle. The few more bearish candles examples are inverted hammer. So it is just opposite of a hammer, where the body of the candle is at lower side, that is the bottom side, and the wick should be at the upper side. Okay, and the color of the body, that color of the candle does not matter, it could be the green or red. And the same thing, that the size of the wick should be 2 to 3 times than the body of the candle. Okay, so once you identify such kind of candlestick pattern, that will be treated as an inverted hammer, and their most significance or the importance will be topmost when it is found at the top of an uptrending stock. That it at that time it will be the most significant, right? The example we can say this is the Adani Enterprises. This is the recent, not recent. This is a little bit old example. A recent example is also there, but just to understand that here, this is the daily time frame, and here it is found as a found one hammer, which has the green body, and it is at the top of the trend. And after that, the price has started falling down. Next example is bearish piercing. It is again the similarly opposite to the bullish piercing, where the first candle is green, the second candle is red, and the most important is it it should be closing above the median. It can start making the second candle at the same level or little bit higher, doesn't matter. But the most important thing is to close above the median of the green candle. Okay. Uh, yeah. And the example of bearish
Is
piercing
it
is
closing above the median or below the median?
it should close above the median. Sorry. It should close below the median, not above the median.
Okay.
Yeah. So if the first candle is the green candle and the second candle is the red candle, so it should close below the median. So this is the median. Halfway through, it is closing below. Okay. The where it is where the formation is, it can start forming at the same level, or it can start forming little bit from the higher of the previous candle. Okay, the both possibilities are there. But the main important thing is should close below the median. Okay. Yeah, and the example of again Nifty 50. So this is the green candle. Okay, the next candle is the red candle. It is closing below the median of the green candle. Even the same thing, even this example. So this example is not typically a BS piercing because the because of this first the size of this candle is not as per the definition, because here the wicks are much more longer than the body also. This is the kind of perfect example of bearish piercing. Okay. The another one is called bearish engulf. So bullish piercing is the bullish to bearish piercing, and again the bullish engulf to bearish engulf. It's the same thing. It is again a two candlestick pattern where the first one will be green, second one should be red, and there could be three possibility. The second candle should start at the same level or little bit higher, or even at the gap down. All the possibilities are there. The most important thing is to close either equal to the green candle or maybe below the candle. Okay. So in the another way, we need to observe that it should be completely eating out the effect of the green candle. Okay. So that means price by the green candle, price movement happened till this price point, but the second candle, by second candle, price has again moved up to the same level or maybe below that the previous level. So that means it's a completely nullifying the bullish effect of the previous candle, and that is how it is called the bearish engulf. That is a completely eating out the effect of the bullish candle. The example again, the Nifty 50 example. Okay, where this is the green candle and the second candle is the uh, red candle, which is completely eating out the effect of the green candle, and after that the market is started falling down. Okay. Next example is the evening star. So as come similarly to the morning star, this is the evening star where the first candle is red. The color of second candle doesn't matter. It could be the red or green. But the most important thing is the third red candle should close below the median of the first green candle. So it should be closing here, or and even there is a difference after starting. So first candle is the same. Second candle, it is a moving kind of a starting with a gap up. Gap up means the in the one time frame, the movement is here, but the second candle started forming from maybe here, a little bit of gap, moved up to there, and then third candle formation from here to down. In this one, the second candle started forming maybe that the same, maybe gap down and again moved up. So second candle doesn't matter that it should be small candle with a smaller body. The main significance is of the third candle. Okay, the third candle should be a red candle which is closing below the median of the first candle. So if you found this three candle combination, that will be treated as a evening star, and um, it is its significance is again at the top of the trend. When such kind of candle is found at the top of the trend, it has the most significance. That means it is giving you the sign of a reverse trend, a reversal. That means price is going to go down once you observe such kind of trend at the top of any stock. So look at maybe something like this one. Okay, so this is the first candle, this is the second, which is a smaller body, and the third one. Okay, and I believe, yeah, this is the Adani example one more time. Okay, then from there, the stock price is most likely to go down. Some more candlestick, maybe I'll take just a few more minutes. That is called a neutral candlestick pattern. And there are three types of neutral candlestick pattern. They are called as a doji, spinning top, and harami. So this is the type. It is not the foul language. It is the technical analysis part. So don't be confused. So dojis are the very, I can say very small candle which has a very thin body and maybe the significant or the having the good wicks up and down. Okay, the body of the color of the body does not matter. It will be a very thin body, red or green. So, okay, um, and the spinning top is nothing but again the smaller body, not very thin, but a small body, and both up and down maybe a smaller wick. So that means there is not much of the price movement is happening. It is not giving a clear cut indication of the price movement. It is a smaller body with a smaller wick. Okay, that is called sorry, spinning top. Um, Bullish harami is the another neutral candlestick pattern. So what is happening there is there will be a red candle first, and in the between of the red candle, there will be next candle will be a green candle. Maybe just for understanding purpose, these two combination of these two candles is looks like maybe a pregnant lady. Again, just for remembrance purpose, nothing to offense any lady here. Otherwise, you can remember there's a red candle, and in between the red candle, there will be a next candle will be a green candle. Okay, so such candle is called as a bullish harami, but it is a neutral candlestick pattern formation. That means whenever we find any of these three, either a thin line with a significantly bigger wicks, or the small candle with a smaller top and bottom wicks, or this kind of bullish harami, all are treated as a neutral candlestick pattern. That means we cannot say anything whenever we see such candlestick pattern. That means we need to wait for another candle to be formed to take our trading decision. Okay. Yeah, I think that's the last concept is called a volume. Volume is a very simple. I think yesterday we have also seen. So if you go to this particular, this is called the indicator, this particular toolbar, and if you add here volume, okay. So below the on the same chart there will be another vertical bars will get added. The colors of the color of these bar will be again red and green, and again there will be a one kind of a gray line, horizontal gray line. What that indicates, this bar indicates the volume. Volume means on that particular time frame. For example, if we have selected SDFC daily time frame, what is the number of stocks has been purchased or sold. Okay. So if you look at here, there are, I mean, when I hover my mouse against these vertical bars, if you see their number, okay, it's 9.2 million or 7.9. So that means that many stocks has been traded on that particular time frame. This gray line indicates the average volume. So that means any line which is any bar which is above the this average line will be treated as a good volume than the average bar. Okay. And in trading, we are also going to use this volume data for our better conviction purpose. So as of now, just learn how to add the volume and how to read them. And here the color of these volume, the bars are nothing but whatever will be the color of the candle, or by default it will take the same color. If the color of candle is green, it will be green, red to red, and that's all. Okay, so volume again is reflects the intensity of the price movement. That means if the price is going up and volume is really high, high means the more than average. That means the whatever the price movement, we can say that it is a genuine price movement is happening, either up or down. Volume gives the clue the genuineness of breakout or breakdown. Okay, so if there's a long-term resistance is breaking or long-term support is breaking, at the same time volume is also high, so it gives a better conviction that okay, whatever is the price movement is happening, as I said, it's the genuine proof. At the same time, it also gives the indication to determine the reversal. How? That we will learn when we'll learn about the implementation. Okay. So increase volume with increase in price and indication of the healthy trend. Okay, that is what we said, that if there is a price is increasing and the volume is also increasing, that means it is something realistic happening in the market. Suppose the price is moving very fast and volume is not moving, it is much more below the average. That means there is a something, some goof up or some fake price movement is happening. Same thing about the down. If price is falling down, but the volume is much lower than the average value, then think that okay, this is the maybe some intermediate, some temporary correction. Ultimately, market is not going to fall. So this is that there's a few very simple things. Okay, when you quickly see any stock and wanted to do the trade, these are some of the very simple things that okay, based on that you can able to either decide on your trade or maybe hold on your trade along with some more conviction, which we will learn. Uh, this and one example of the volume. Okay, the Yes Bank reversal with high volume. So whenever the Yes Bank stock fell down. So look at this one. There is a first of all the long term resistance breakdown is happening. At the same time, wherever there is a break is happening, there's a long red candle and the volume is really high. It is kind of a three times than the average volume. So maybe whoever were holding the stock at that particular time, if the person could have idea about the volume, he could have exited there itself. Okay, so yeah, so that's all for today. If you have any question, feel free to ask. Otherwise, we'll wind up the today's session.